The Chinese electric vehicle maker NIO is one of the hottest EV stocks traded on U.S. exchanges, but it doesn't sell any products in the U.S. That could change sooner than investors might expect. An entry to the market by a Chinese producer would be a game changer for the entire U.S. car business. Fortunately for the U.S. companies now in the business, the prospect looks to be a long way down the road. Deutsche Bank analyst Edison Yu tracked down an interesting NIO tidbit. He found a job posting on LinkedIn related to business planning for the U.S. market. The posting is now closed, but Yu says it was looking for someone to formulate an action plan to enter the U.S. market. NIO didn't immediately respond to a request for comment. It is a sign that NIO is thinking about the U.S. market. Still, it is early, and Yu's financial model doesn't include any U.S. sales for NIO even in 2025. He said entering the U.S. would be difficult given relations between Beijing and Washington, D.C., but that the Biden administration may be less antagonistic to China than policymakers were under President Donald Trump. Sales in Europe will come before entry into the U.S. NIO plans to sell cars on the continent there later this year. There are already numerous job postings on LinkedIn for open positions based in Oslo, said the analyst. NIO's peer Xpeng, XPEV, began selling cars in Norway in December. Another factor that could keep NIO out of the US a little longer is that the company is new and the Chinese EV market is doing just fine. NIO's manufacturing capacity is roughly 100,000 vehicles a year, and while the company plans to triple that figure coming years, it is selling all the cars it can make in China, at least for now. Eventually, more car makers in the US would mean more difficulty maintaining market share for existing players. More EVs in the US will put pressure on traditional automakers to transition to electric offering faster. The existing players appear to realize all this. General Motors, GM, plans to launch 30 EVs around the globe by 2025, investing about $27 billion to make that happen. Ford Motor, for its part, recently announced plans to spend about $20 billion between now and 2025 on EV and autonomous vehicle development. History tells us that foreign-made cars can have a tremendous impact on the industry. Back in the early 1970s, GM, Ford and Chrysler had roughly 70% to 80% of the US car market, while Japanese players were an afterthought. Today, the original Detroit Three have roughly 40% of the market. Toyota Motor, TM, Honda Motor, HMC, and Nissan Motor, 7201. Japan, account for roughly 33% of all light vehicle sales in the US. It will take a while for any foreign automaker to build a US business from scratch, but NIO stock appears to be reacting to Yu's find. Shares were up 3% to $61 in midday trading Tuesday. The shares are up about 25% year-to-date, after rising more than 1,100% in 2020. Analysts see more gains for the stock. About 65% of analysts rate shares buy. The average buy rating ratio for stocks in the Dow Jones Industrial Average and S&P 500 is about 55%. Yu, for his part, rates NIO stock at buy and has a target of $70 for the price.